On, it's P coming to you with the introduction to futures trading. Many of you have been asking me about putting out a futures video, so here it is. We're going to be exploring the world of futures trading, which is a dynamic financial instrument with unique opportunities and risk. First things first, we're going to go over the overview of the NinjaTrader platform. Now, there are various platforms that you can use to trade futures. One of my favorite platforms is going to be NinjaTrader. Right? They have other platforms such as Trade of Eight, things of that nature. But NinjaTrader is one of my favorite. I do like Trade of Eight as well, but again, NinjaTrader is what I will be talking about today. It has a user-friendly interface. It's intuitive, designed for easy navigation and customization. It has advanced charting, very powerful tools for in-depth market analysis. So my people that love to dive deep into, the market, doing their research, their due diligence, this is great for you. Automated strategies, you can build and back test algorithmic trading systems. Now, those of you that follow me, you know that I have a bot. I also have various algos that I've created. So this is great for me to test things out and see how well my systems work against the market. Another reason why I prefer and I like NinjaTrader. Assessing futures contract. This is very quintessential to trading futures, okay? One of the key elements here is going to be market selection. You're able to choose from a wide range of futures markets, right? And we'll go more in depth on these topics as well, but this is the overview. Number two would be contract specification, understanding the unique details of each contract. Knowing what you're trading is very important. All right, doing your homework on futures market, doing your homework on these contracts is very important. Cannot stress that enough. We're going to talk about this. Okay. Order placement, executing trades seamlessly through the NinjaTrader platform. Knowing how to put a trade in is one of the most important things when starting off trading. I remember when I was first starting out, didn't know how to place a trade, right? Didn't know how to take profit. So I'm going to go over these things with you as well to help you to fast forward, jumpstart your futures career. Understanding futures contract specifications, right? Understanding contract size. This determines the value of each contract. Knowing how much money you are looking to make per point, per tick move is very important, right? And we'll talk more about why that is so important, but just know doing your homework ahead of time, knowing, which tickers is which, how much will I be making off of this contract, this equity is very important. Tick size, minimum price change and impact on profit and loss. Again, it is just as important to know how much you will be losing if the move goes against you, as well as how much you will be making. So it's not always about how much money am I going to make? How much money am I going to make? We also want to talk about how much money will we be open to lose as well if this move does not go in our favor? Okay. Expiration dates is a third, and it's very important. It's critical for managing open positions, right? Knowing when contract expire, knowing when to switch contracts, which basically means to switch over, roll over a contract to use the next month or whatever have you contract instead of maybe a current contract that you're using. Maybe that contract will be is expiring or it has expired, not using that contract. It's very important. I've seen traders not do their research, not doing their homework, and just trade, log on and trade, and not even switching their contract, not knowing that a contract has expired, and it costs them dearly. I've seen traders lose thousands of dollars just for choosing the wrong contract, and the move still went in their favor. Right. So it's very important that you know what you're doing and you know what's going on in the markets, and you do your homework on expirations, right? And typically these brokers, these prop firms, they have a system where they will actually tell you when you log in, hey, this contract on this equity is expiring. You should switch over to the current contract, right? So it's very important that you are reading these messages that are popping up on your screen. You're not just exiting out of them, closing them out, rushing, trying to get into a trade. Right. Have a system in place so that you can take your time to read what's going on. Because at the end of the day, it is your money on the line. If especially if you're a funded trader. Here will be touching on contract value. All right, calculating future contract point value. Told you that we'd be going over the move, how much you could expect to make, during these moves. So here we have a list of equity futures here. Again, ES, so I'm go over a few. ES would be SPY. NQ would be the NASDAQ. That would be like QQQs. All right. You also have the Russell 2000, Mini Dow as well. Okay. I typically focus on ES and NQ, mainly gold sometimes, not up here. All right. But those are typically the ones that I focus on because in trading, I typically focus on the market itself, SPY and Qs, the tech sector, right? So I just switch over to futures, some of the same techniques that I've used in option trading. I use in the futures market as well. Very similar. There are some differences. Okay. One of them being when you're trading futures, it has a tick system. So, similar to in options where everything is prices going up by cents and eventually you'll get to dollar increments. Like maybe a stock rose a dollar, but before that, it's rising by cents. Very similar to that. The tick system is very similar to the cent, except it won't go, 1 cent, 2 cent, 3 cent. It goes in increments of for ES 25, rather 25 cents, right? So each cent or each tick has a value on different equity systems. Okay. So similar to ES, also NQ has a 25 cent or 25.25 tick system as well. All right. So four of these ticks would equal 1 point. 1 point would equal these values, right? So I'm going to switch over here to the point value because this is what I focus on mostly when I'm looking for my moves. I will look for maybe a 1 point move, 2 point moves. It just really depends on where we're at on the market, in the market, and what exactly am I looking to do? Am I looking to scalp? Am I looking to day trade a position, right? Am I looking to just kind of get some profit under my belt for the day? Yes, some a buffer in place. I may just scalp. I may just go for a 2 point move. Here you can see that 1 point on on NQ is $20. So if I'm looking for a 2 point move, as soon as I enter the trade and I see that I'm up 2 points, I can just take profit. Right. I'm up $40. Now, one of the great things about prop firm trading and some of these other trading platforms is that some of them allow you to have up to 20 accounts. So you could imagine if you are trading, let's just dumb that number down to, let's say, 5 accounts. If you have 4 or 5 accounts, so we'll say 5 accounts, and you're looking to scalp, let's just say a quick scalp to get 2 points, which would be $40. And you just made $200. All right. Some people don't make $200 in a day at their day job. Right. And we're talking about a 2 point move, which is very minimal, very small. It's very easy to get a 2 point move in the market, especially trading NQ. NQ typically will run anywhere from $100 to $150 in a day. I've seen NQ run 300 points in a day several times. So 2 point move is nothing. Um, Not to brag, but most of my trades are anywhere from, I would say, 8 to about 15 point moves. Okay. As far as a day trade or quick scalp. Um, Futures has very, really high volatility. So a lot of times when you get into these trades, they move really fast. You'll be up 8, 10, 15 points in seconds. So, it's really not as hard to make money. The hardest thing I believe in futures is to manage the risk for most people. Right? Not putting on too much size because again, these tickers can move really fast. Futures is very volatile. So knowing how much you can handle to take as far as a loss is very important. Okay. So already know what equity you plan on trading, know how it moves, get very familiar with how the ticker moves, so that you can know your own risk tolerance and risk profile. Know how much you're looking to make in a move. All right. Here is a Superdome. This is pretty much just, this is actually my Superdome. And here you can see the buy, the sell, and the price labels here. Now, I took this picture when market was not open, obviously. So there's no numbers that would typically be in the middle here. These numbers would just tell you, give you the display of price, right? Now, if you're looking to get into a trade, let's say that you're looking to go long, you're looking to take calls, so to speak, if you're trading options, you would be looking to place an order on this side of price. So you would literally come over and you would click into one of these gray boxes, these gray rectangles here. Okay. Depending on where price is at, if you're looking to get in right there at that specific price, it'll be highlighted here. So you would just click, excuse me, where price was at. If you wanted to, maybe there was a certain level that you wanted to get in at, maybe price is here and you're looking to get in at a certain level, you could just try to enter in at that level. So you would click at that price of the level that you're looking to get in at if it wasn't at the current price and just click that level there. Same thing, vice versa for sales. If you're looking to go short or take put, so to speak, in option trading, you would just click on the sell side of the order box. Okay. That simple. Don't make it any harder than it is, right? And I typically will place market orders, so I'm getting in, at the market price so that I can get in quickly, get out quickly. Now, sometimes because I'm taking these market orders, I won't get the best feel, but I'm looking again, futures is very volatile and it typically moves really fast. So it hasn't affected me negatively in a way where I've switched up how I'm setting these orders. I see plenty of people doing the same thing. Right. It's really mostly about your strategy, your risk. You're putting on the table. Here you can see that I only have one contract selected. I typically will enter one contract when I'm getting into a trade just to test the waters. Because you don't want to put on too much size early. Maybe you get a pullback where you can average in. I am keen on averaging into my positions, especially on in futures, because it moves so sporadic. And so you may be thinking that you're getting in at a nice price, when in actuality, it's going to pull back more and you can get into a better price and average in. Okay. So again, I would not recommend going in full throttle as soon as, the market gives you a good look or a look that you think looks good. All right. Don't go in 4, 5, 10 contracts all at once, average in. Averaging on pullbacks. If you're looking to place a day trade and maybe ride the trend, don't get in as much full position size at the beginning. Get in on the pullbacks, average in. And that way, that will also limit your exposure and protect the bank, protect the capital. Okay. Here is the instrument where you can switch between different equities such as NQ, ES, gold, and so on and so forth. Okay. If you're looking to close out a contract, looking to close out your position, you just click the close button here. You can, if you're in numerous contracts, again, you can add more contracts to what you're looking to buy. You can trim them down, close them out. If you're in like 5, you can go down to 1 or 2. You're going to close 2 of them out, close them out, whatever have you. But this is how you do it. The Superdome is typically what I use to get in and out of trades on NinjaTrader. I think that it's a great tool. Managing futures trades and risk. A stop loss is important. Knowing when you're going to get out of a trade when it does not go your way is very important. I cannot stress enough that using a stop loss will keep you in the game. All right. Limit drawdown risk or downside risk on open positions. If you're in a trade and it's not going your way, do not be afraid. Do not hesitate to get out of the trade. Reassess, look for a better position, look for a better entry, or maybe just get out of the market altogether. Maybe it's not the right day to be in the market. Maybe there's some news that happened and it has the market moving sideways in a very tight range where it's very difficult to get a position. All right. Every day you do not have to trade. Position sizing is very important as well. Allocate capital prudently to manage over risk. All right. Not putting on too much risk is very important. You don't, just because you may have a nice look, right? And you may very well have did your homework and maybe market is coming down or coming up to a level that you've been waiting for. Anything could happen. All right. Don't go all in on the first go because it could very well be a sweep. They could be sweeping stop losses, right? So they'll push the market, they'll push the ticker above or below stops to run traders out. and then it'll make the move that you had been anticipating. All right. So that's why it's important to go in small and to size in so that you can get a great price point. Okay. Trade monitoring. Continuously assess market conditions and adjust strategies. Right. The market changes drastically every year, every other month, every other week. All right. Some things that may happen working for you 2 years ago may not work for you now. So it's important that you're always on top of your game. You're always checking market trends, market structures, and assessing the market to be able to trade better, right? To be a better trader. Being a better trader is staying on top of market conditions and finding a strategy that works in various markets. Every strategy won't work in every market, but having an arsenal of different strategies is always a great thing. Okay? Do your homework. Just do your homework. In conclusion, some key takeaways. You have a plethora of instruments. Futures offers unique opportunities and risk. The NinjaTrader platform has powerful tools for assessing and executing futures trades. All right. Understanding contract specs is very critical for calculating point value and managing risk. Knowing how much you tend that you may make on a trade or vice versa may lose on a trade is very important for you to know beforehand, not while you're in the trade. You shouldn't be getting in a trade and saying, okay, how much am I going to make on this trade? You should already know your entry, your exit, and your stop loss, right? So you should already know your entry, your profit target, and your stop loss before you even get into the trade. That's just trading 101, trading basics. Having a disciplined approach is pertinent. Risk management is key to successful futures trading, as it is important in any trading. So, having a plan, having rules in place, following those rules, being disciplined is the way to go. All right, can't stress that enough. In conclusion, I believe that futures trading can offer you another avenue of revenue. It can offer you another route to freedom if you have not reached financial freedom yet, if you have not tasted or touched financial freedom yet. I believe that this could offer you some leverage, especially. It is open basically almost 24/7. Market closes on the week and Saturday and opens back up Sunday at 6 p.m. Eastern. So for those of you working 9 to 5s or you have a 9 to 5, you're working the night shift, the gray shift, whatever have you, whatever your story is, futures trading is open to you just about every hour on the day. I believe it closes at 5 p.m. Eastern and it opens back up at 6 p.m. Eastern, Monday through Friday. So, you know, this is a way for you to possibly make money while others are sleeping, make money, while others are at work, whatever have you, whatever your story is. It's very versatile. It's open throughout the day, throughout the night. So there's opportunities to make money, right? Because money never sleeps. One thing about money is it never sleeps. Okay. So again, I'm not going to beat a dead horse, not going to stress this. I just can't stress this enough. I believe that futures trading offers a lot of leverage for the retail trader to step into the prop firm world, especially if you want to go the prop firm route. If you don't, that's fine as well. It's still here for you to take advantage of. All right. That's all I got for y'all. Hope that you enjoyed this presentation. Peace.